Millions of Americans who rely on Social Security every single month need to understand what banks are implementing right now, because if you are not aware of this modification, your next deposit could appear very different than what you are expecting. Welcome back to the U.S. Guide. I am Ivy, and today we are examining something that is affecting retirees, disabled Americans, and SSI recipients across the country. This is not a rumor, and it is not political noise. This is a real procedural shift happening inside the banking system right now, and it directly touches the moment your Social Security money hits your account. We are going to walk through every single detail so that by the end of this video, you will know exactly what is happening, why it is happening, and most importantly, what you should do about it. Let us start with the big picture. Social Security is not just a government program for tens of millions of older Americans. It is the foundation that their entire financial life rests on. We are talking about monthly payments that cover rent, groceries, prescription medications, utility bills, and everything else that keeps daily life moving. When anything changes about how or when that money arrives, it matters deeply. Even a shift of a few hours can create real concern for someone who is waiting on that deposit to cover an urgent expense. That is why this update deserves your full attention right now. So, what exactly is changing? Banks across the United States are introducing a new layer of processing for incoming government deposits, and Social Security payments are squarely in the middle of that category. This new procedure involves additional automated verification steps that financial institutions are now running before they release funds into your available balance. These steps are designed to confirm that a deposit is legitimate, that the account receiving it is properly linked and secure, and that no problematic activity is present before the money becomes spendable in your account. Now, here's the part that most people are not hearing clearly. This change does not come from the Social Security Administration. The SSA is still sending your payments exactly on schedule. The dollar amount you are entitled to has not changed. Your eligibility has not changed. The calendar dates when SSA transmits those payments have not changed. What is changing is what happens after that payment leaves the government and lands at your bank. That is where the new processing protocol takes over, and that is what you need to understand fully before your next payment date arrives. For years, direct deposit has been the gold standard for receiving Social Security benefits. It eliminated paper checks, removed the risk of mail delays, and put money into accounts faster than any other method. The federal government has promoted direct deposit strongly because it works reliably and efficiently. Banks built their systems around handling these electronic transfers smoothly, and most beneficiaries came to expect that their deposit would appear right on time without any issues. That expectation shaped how people plan their bills and manage their money month after month. But the financial world does not stay still. Banking technology is always evolving, and security threats are evolving right alongside it. Electronic payment exploitation has increased in recent years, and government benefit payments have become a specific target. Bad actors attempt to intercept transfers, set up unauthorized accounts to capture redirected funds, and exploit vulnerabilities in the verification process. Financial institutions have had to respond by upgrading their internal detection systems and adding new checkpoints to the payment handling process. The update that banks are now rolling out is a direct product of that response. Here's what this looks like in real terms. When your Social Security payment arrives at your bank electronically, the bank system now runs it through a more thorough verification process before crediting it to your account balance. This process is automated, and in the vast majority of cases, it completes very quickly. We are not talking about a delay of days. For most people, this will be a matter of hours, and in many cases, you may not notice any difference at all. But there will be a portion of recipients who check their account on the expected deposit date and find that the balance has not updated yet. If that happens to you, it does not mean something went wrong. It means your bank is still running the funds through its verification system before releasing them. Why is this verification necessary? Banks have significantly strengthened their detection technology in response to the sharp rise in payment exploitation affecting the financial system. These systems use automated tools that scan incoming deposits and look for signals that something might be off. They analyze account history, cross-reference payment details, and compare transaction patterns against what is considered normal for that account. If something triggers a flag during that review, the system holds the payment briefly while additional checks are completed. In most situations, this review wraps up within the same business day, and you never even have to get involved. Think about how many electronic payments flow through the American banking system every single day. Payroll transfers, business payments, government disbursements, automatic bill payments, and countless other transactions all move through the same digital infrastructure simultaneously. Banks are working to modernize that infrastructure to handle this enormous volume while keeping every transaction accurate and secure. Government benefit payments like Social Security represent a major piece of that monthly transaction load, which is one reason why these updated procedures were designed with that category specifically in mind. This brings up an important question. If different banks are handling this process, does that mean every recipient will experience it the same way? The answer is no, and that is worth understanding. While the general direction of this update is consistent across the financial industry, individual banks have their own internal systems and their own timelines for rolling out new procedures. That means some recipients may notice changes sooner than others. Some banks may process these additional verification steps faster than others. Your specific experience depends in part on which financial institution holds your account and how their systems are built. For most people, this will remain completely invisible. Your deposit will show up in your account at roughly the same time it always has, and nothing about your routine will need to change. But if you are one of the recipients whose bank takes a little longer to complete the verification process, knowing this in advance removes the concern that comes from not understanding why your money has not appeared yet. Being informed is always better than being surprised, especially when your monthly budget depends on that payment arriving. Now, let us talk about what you should actually do with this information. The first and most practical step is to make sure your direct deposit details on file with the Social Security Administration are completely accurate and up to date. This is critically important. If you have recently changed banks, closed an old account, or opened a new checking account, you need to update those banking details with the SSA immediately. When your payment is transmitted to an outdated or incorrect account, it creates complications that go well beyond a simple processing delay. Keeping your information current ensures that funds move smoothly from the government directly to the right place. The second thing you should do is start monitoring your account more regularly around your expected payment date. You do not need to check constantly every few minutes, but simply being in the habit of logging in or checking your balance on the day your deposit is scheduled gives you an accurate real-time picture of what is happening. If the payment shows as pending, that is a normal part of the new verification flow. If it has not arrived by the end of that business day, that is the right time to reach out to your bank directly for clarification. The third recommendation that financial advisors consistently offer to Social Security recipients is to maintain a small financial cushion in your account whenever possible. This does not mean you need a large savings reserve. Even having enough to cover one or two essential expenses gives you breathing room if a deposit takes a few extra hours to clear. Life does not pause because a bank needs slightly more time to verify a transaction. And having a modest buffer means you are not caught in a stressful situation over what is ultimately a temporary timing difference. Here is something else that deserves attention. The rise of this kind of banking update often gets exploited by bad actors who use real news as cover for deceptive alerts. You may receive a phone call, a text message, or an email claiming to be from your bank or from the Social Security Administration, saying that your payment has been delayed or that your account needs to be verified immediately. These messages may sound official, and they may reference things that seem accurate because they are built around real news stories just like this one. Do not respond to unsolicited contact with your account number, Social Security number, banking credentials, or any other personal information. Real banks and real government agencies do not operate that way. The SSA will not call you unexpectedly demanding verification before releasing your payment. Your bank will not send you an email asking you to click a link and confirm your identity in order to receive your deposit. If you receive any communication like that, hang up, delete the message, and contact your bank or the SSA directly using the official contact information you find on their verified websites or the back of your bank card. Protecting yourself from exploitation starts with being skeptical of unsolicited contact, especially when it involves your benefits. The broader context for all of this is that the American financial system is undergoing a significant technological transformation. Electronic payments have replaced paper in nearly every corner of banking, and the infrastructure supporting those digital transactions must constantly be upgraded to keep pace with both volume and security demands. Social Security payments are one of the largest single categories of monthly electronic transfers in the country. Ensuring that this enormous flow of funds is handled with accuracy, speed, and strong prevention measures is a shared priority for the government and for every financial institution involved in delivering those payments. For seniors and others who have received these benefits for years, change of any kind can feel unsettling. That is completely understandable. When your financial security depends on a monthly payment arriving reliably, even a small shift in the process deserves a clear and honest explanation. What this update represents is not a threat to your benefits. It represents the banking system doing what it is supposed to do, which is protect your money and make sure it reaches you safely rather than being intercepted or misdirected before it gets to your account. The Social Security Administration continues to operate on its established payment schedule. Retirement benefits continue to be distributed based on the recipient's birth date. Supplemental Security Income payments continue to go out on the first of each month. Disability benefit payments continue to follow their regular calendar. None of that has shifted. The SSA's role in this process remains exactly the same. The agency calculates your benefit, determines your payment date, and transmits the funds electronically. Everything after that point falls within the responsibility of the banking system. Understanding where SSA's responsibility ends and where your bank's process begins is actually quite helpful when you are trying to make sense of a payment delay. If the SSA has sent your payment and it has not appeared in your account yet, the reason is almost certainly related to your bank's processing timeline rather than anything going wrong on the government side. That distinction helps you know who to contact and what questions to ask if you ever need to follow up. Calling your bank is typically the faster path to getting answers about deposit timing once you know the payment has been transmitted. One more thing worth discussing is the long-term direction of all of this. The financial industry is not done evolving. New payment technologies, stronger verification systems, and more sophisticated prevention tools will continue to be developed and deployed in the years ahead. Each of these improvements is aimed at making the system more reliable and more secure for everyone who depends on it. As a Social Security recipient, you are at the center of one of the most important financial systems in the country, and updates like this one are part of how that system continues to function at a high level. Staying informed is the single most powerful thing you can do as a recipient. When you understand how these systems work, changes stop being scary and start making sense. You can plan appropriately, ask the right questions, and avoid being misled by people who try to use confusion as a tool to take advantage of you. Knowledge is genuinely protective when it comes to your financial security. Ivy and the entire team here at the U.S. Guide are committed to making sure you always have the clearest and most accurate picture of what is happening with your benefits and with the systems that deliver them. Our job is to cut through the noise and explain what actually matters in plain language so that nothing catches you off guard. If this video helped you understand the new bank processing protocol more clearly, please take a second to give it a like right now because that single action tells us to keep producing content exactly like this, and it helps others who need this information find it more easily. This channel exists to keep you informed, and we are grateful every time you tune in. To summarize everything we have covered, banks are rolling out additional verification procedures for incoming government deposits, including Social Security payments. These procedures are designed to protect recipients from exploitation and to modernize how financial institutions handle large volumes of electronic transactions. For most people, the impact will be minimal or entirely invisible. In cases where a slight delay occurs, it will typically resolve within the same business day. The Social Security Administration is not changing its payment schedule or benefit amounts. Your money is still being sent on time. What is changing is the brief moment between when your bank receives that payment and when it appears in your available balance. Keep your SSA direct deposit information current. Monitor your account around your payment date. Maintain a small financial buffer when you can. Be alert to bad actors who may use this news as cover for deceptive contact. And stay connected with the U.S. Guide, so you are always the first to know when something important changes. Ivy will be right here with the next update.